Hey guys, Matthew Morrow with MorrowInvest.com. I'm bringing today's 2-minute tip of the day. Today's tip is about the difference between tax evasion and tax avoidance. One is very illegal and one is very legal, and it is your right as a citizen and you need to be doing it. All right, so let's look at these two. Guys, most of us would never see ourselves as a tax evader, right? Those are bad people, right? When we think of the mobsters back in the 20s and 30s that were arrested, they didn't get those guys for the murder and all the drug dealing and all those kind of things. They got them on tax evasion. That's why tax evasion is a federal penalty. You get in lots of trouble for evading paying federal taxes, state taxes. So most people, if I talk to them, they would never, if I just openly said, hey, do you cheat on your taxes? Most people are going to say, no, of course not, I don't cheat on my taxes. Because when you say cheat, that sounds bad, that sounds evil. And you're a good person, right? You would never cheat on your taxes. The tax code, however, states that any money you make, whether it be from a gift, a sale of land or property or investments or income or any type of wage or money that you receive can be taxed, okay? And so what a lot of people do is, well, they sold their truck and that was, $4,000, $5,000, $10,000, but that's just, you don't have to claim cash. Don't have to claim cash. This is going to upset a lot of people because I know a lot of you pocket cash. Now, I'm not going to beat you over the head about this, but I think that this is very, very important to talk about. They didn't get these mobsters, like I said, on these other crimes. They got them on tax evasion. And how they got them on tax evasion was they showed that they had lots of money. They had property and cars and other stuff, but yet their income on their balance sheet didn't show that. And that's how they figured that out, that they were pocketing money. Not only is this majorly illegal, I think it's morally wrong. Now, some of you might feel that, oh, well, if I have a yard sale and pocket a $30, that's one thing. But, if you have a yard sale and you sell something for $30 or $40, do you have to put that on your taxes as extra income that you earned? Technically, yes, I think you do, and I claim all of my cash. But there are so many businesses, as I research buying mobile home parks or storage facilities, or so many of these rental properties and things are on such a cash basis that people basically have two sets of books. They keep one set of books that is what the real numbers are, all their actual cash and what they actually made off the places, and then they have another set of books that they do their taxes in the bank with. Now, a lot of you are saying, well, what's the difference? Well, I think it's very important to not pocket money, to not pocket cash. Now, I personally, as a believer, I believe that when I pray for God to bless me, I believe He's the one that's blessing me. So, it feels kind of weird to be like, thank you, God, I'm just going to pocket that money. That just doesn't seem right. But a lot of people don't differentiate between the two. So here's how I would say you should figure that out for yourself. If you have a yard sale and you make an extra $100, most of you are going to go and put some gas in your tank, take the kids for ice cream, maybe eat lunch, and that $100 is gone. And so in your mind, you don't really feel like you're pocketing a lot of money. However, many of you guys run businesses. You run side businesses and you actually make thousands and thousands and thousands of dollars, and you don't claim that money. I believe you are running a very dangerous game and can get yourself in a lot of trouble, especially when you don't have to. This is what's so great about our tax code. You can set up different entities and get tax write-offs, okay? You can do it right and honest and good and not pocket anything. And also, I tell people I'm not the smartest guy. So I want to claim all my cash, and they say, "Oh man, don't want to pay taxes on that?" Well, tax evasion is very illegal. However, tax avoidance is very legal. So tax avoidance. What's this look like? Well, maybe in your county as the school system starts up, maybe they have a tax holiday where they cut the tax on, say, sales tax for buying school items for back to school. Well, it's your right as a citizen to choose to go and buy those things on that day where you pay less taxes. Could you move to Florida or Texas or any other place where they didn't have state income taxes? Yes, of course you can. So there are different types of investments. You know, should you get a tax break for investing? Well, that's the way things are. So depending on what you invest in, you know, if I give my money to my church or another 503c nonprofit, that's a tax write-off, right? So by giving money to charities, you get tax write-offs. Well, what about giving money to your children? Well, you can give up to, I think, $13,000 a year per child, tax-free out of your income. There's lots of ways to do things in a legal way. And part of the way they do this in these different companies is setting up entities. So as your small business, you need to have your business and your personal separate. These need to be very separate, okay? These are not the same thing. Okay, so on the business side, have yourself set up a checking account, set up an LLC, set up a corporation, set up some type of entity where you can run everything. And why would you do this? People say, man, this seems like a lot of work, seems like a lot of stuff to do. Well, think of it this way. If you want to receive the most amount of tax breaks, you're going to want to set up a business. A lot of people will say, well, should I even do this? You know, I just have a little lawn service. I just cut 10 yards. I just have a babysitting service. I just fill in the blank, right? But I'm telling you, if you make an extra $10,000 or $20,000, instead of cheating on your taxes and not claiming that money and pocketing it and trying to figure out which accounts go where and trying to keep track of all that stuff, just do it the correct way, which is set up a business or entity, and it will open the door to massive amounts of tax write-offs. So then, on your taxes, you get to write off your car, your vehicle, your maintenance, your clothes that you use for business, travel expenses, food, health insurance, on and on and on and on, the tax benefits go. So one is very illegal, one is very legal, and you should do it. I hope this has blessed you today. Have a great day.